6 Common mistakes when applying for a construction loan for investment property. Getting ready to launch a new investment project often brings excitement, but funding it can quickly become a challenge. Many buyers struggle to secure a construction loan for investment property. That's where a partner like Commercial Lending USA becomes valuable. With experience in financing, they can help guide you through the process and avoid common missteps. This video highlights 6 frequent mistakes that can delay or derail your application and provides insight into how to approach this step with better preparation. Mistake number 1. Submitting incomplete or vague construction plans. Lenders don't issue loans based on potential. They assess risk. Your construction plans serve as the foundation for this evaluation. Think of them as your business plan. Without clear blueprints, cost breakdowns, and timelines, lenders may assume your project is too risky. Essential components include architectural blueprints that leave no ambiguity, material specifications outlining quality and quantity, a realistic construction timeline with key milestones, detailed contractor bids to account for cost at each stage. Missing or vague documentation can raise red flags. For instance, if your plans don't specify materials or omit timelines, it's hard for a lender to assess project viability. This could delay approval, reduce your funding amount, or lead to outright rejection. Solid, detailed plans show lenders that you're serious, prepared, and capable of executing the project. Mistake number 2. Not understanding how construction loans work. Many investors treat construction loans like traditional mortgages, which leads to confusion and mistakes. Unlike long-term financing, construction loans are short-term and structured around project phases. Here's how they differ. Disbursement structure. You won't receive the full amount up front. Funds are released in draws after specific milestones are met. Interest-only payments during construction. You'll likely pay only interest until the project is complete, then shift to regular principal and interest payments. Additional costs. Expect fees for inspections, appraisals, and loan origination. Overruns or delays may lead to extension or penalty charges. There are also different types of construction financing. A construction-to-permanent loan automatically converts to a mortgage after completion, while other setups involve 2 separate loans. Understanding which structure fits your needs helps avoid last-minute surprises. Mistake number 3. Overlooking your financial profile. Lenders don't just look at the property, they look at you. Your credit score, debt-to-income ratio, DTI, and available cash reserves play a key role in whether your loan gets approved. Here's what matters: strong credit history. This shows you're reliable with repayments. Low DTI. A high ratio means your income is already stretched. Most lenders prefer it under 43%. Cash on hand. You'll need funds for down payments, closing costs, and unexpected expenses. You'll likely be asked for tax returns, bank statements, and income documents. Keeping your finances in good shape and having a clear picture of your budget gives you a better shot at approval and better terms. Mistake number 4. Ignoring cost overruns and surprises. Construction is unpredictable. Material prices fluctuate, labor shortages happen, and weather delays are common. Not planning for these issues puts your project and funding at risk. Smart planning includes a contingency budget, typically 10 to 15% of total costs. Clear contracts that account for overruns and delays. Insurance coverage for potential construction-related risks. If your budget is too tight, you may run out of funds before the project is finished. That's a serious issue for both you and your lender. Mistake number 5. Choosing the wrong lender or loan product. Not every lender is a good match for real estate investors, especially in construction financing. Some may lack experience or flexibility, while others may offer loan products that don't align with your project timeline or budget. Be sure to Compare lenders based on loan terms, fees, and experience with investment properties. Ask about draw schedules, interest structures, and conversion options. Work with specialists in construction loans for investment property, like Commercial Lending USA, who understand your unique needs. Mistake number 6. Rushing the application process. It's easy to feel pressure to move quickly, especially in a competitive market. But rushing through paperwork, skipping document reviews, or overlooking lender requirements can cause significant delays or even denials. Take the time to double-check all paperwork, clarify lender expectations, gather all required documentation up front. A well-prepared application shows lenders that you're organized and serious, qualities they want to see in any borrower. Final thoughts. Securing a construction loan for investment property isn't just about finding funding. It is about presenting your project as a worthwhile, well-managed investment. Avoiding these common mistakes can improve your chances of approval and keep your project on track from start to finish. If you're unsure where to start, working with an experienced advisor like Commercial Lending USA can provide the clarity and support you need.